Okay, guys, welcome to another insane US session coming up right real soon. So, firstly, let's identify what can potentially happen. As we know on the lower time frame, I've explained to you guys of a potential sell setup within this region of the zone. So, for as long as the market does not close above 1925.55, it is still potentially a sell. So as we know, it has cleared out our first zone of the buy today, giving us a spike of 83 pips back into our zone and dropping back dead down. Now what can happen? So if we look on this particular candle, this is an engulfing buy on M15. And this engulfing buy was technically supposed to be a strong support zone, and now it has been broken. So based off this, usually what will happen if there is no candle that can close above this line 1917.20, but let's just take my key level 1917.66. If it cannot close above the yellow line, that means it will have to go to the next demand zone down where. If we look at the H1, there are two critical levels within this area, 1907.2 down till 1902.09. So therefore, if you want to buy, this is a bit of a risky buy, because if it does break this bottom, it will have to go here. But if you want to buy here, what should you do? Your SL must be below this particular area, this engulfing buy. So your SL must be somewhere below here, 1909, around there, if you want to buy. If you want to buy in our ultra zone, the moment it breaks, then you just cut on M5 or M15. If you want to sell, same rule. For low risk, it cannot break above 1917.66. So therefore, any form of retracement, if you do want to take, that must be your cut point. So to those of us that are still holding ourselves, then just enjoy the drop. The issue right now is the market is trying to make its way into this demand zone, which is quite far, to be frank, 150, 200 pips from this area. But it's possible. This is gold we're talking about. And if there are no random news from how the market structure is supposed to move, it will go here first and then decide to do a continuation down here or reversal up from this location, 1912, 1915. So this is the moment as a trader you can't force a trade in, but instead securing and safeguarding whatever trades that you already have. So therefore, this is the iPad analysis. It gives you a bit of a clearer picture to where gold can potentially go. So for today, I will be looking at 1900, 1902 as my crucial location to either TP my sell or enter a buy.